Welcome back. Wall Street is waiting for a key inflation report out this week, which could reveal more clues about the state of the economy and how soon the Federal Reserve could cut interest rates. On Friday, the S&P 500 and the NASDAQ rallied to all-time highs after new employment data revealed the U.S. economy added 206,000 jobs in June. We've got NBC News senior business correspondent Christine Romans with us this morning with more. Hi, Christine. Good morning. Seems like some exciting indicators going on here this week.
There's a lot happening.
Yeah, a lot happening. Let's start with understanding why did the stock set so high? It's great news, but why?
So the stock market reflects conditions for companies and for their corporate profits. And it has been a fantastic year, a fantastic couple of years for companies. There's the AI craze, artificial intelligence, that's been driving a lot of the tech excitement in the stock market. But overall, conditions are good for companies. They are making money, they are weathering higher inflation, and they are able to pass some of those costs on to their customers. And so their profits are doing well. And so that's what you're seeing reflected in the stock market, along with the expectation that at some point here, the Federal Reserve will be able to take its foot off the brake in terms of lowering interest rates.
And one of the things that we have been looking at to see why are we stuck with them not cutting it is that inflation rate that kind of seems stuck.
Yeah.
Thursday, we're going to get some insight there. What are you going to be looking for?
That's the Consumer Price Index, CPI. It's something most people don't even care about or think about, except over the past couple of years when that number got all the way up to 9%. Now it's more in the 3% range. Will it continue to get down to what the Fed would like to see, closer to 2%? We're expecting some cooling on the inflation front again this week. So that inflation number will be highly, highly watched for everybody on Wall Street.
Absolutely. So then walk us through, once we get that number, what could that mean for the Fed? When could we see those rates cut?
So you're starting to see signs of cooling in what has been a red-hot American economy. The U.S. economy, despite what people tell pollsters, the U.S. economy has been doing very, very well, even with all of those interest rate hikes there on your screen. But it's starting to slow a little bit, cool a little bit, I would say. Still strong, still sturdy, still robust, but not overheated. And that means maybe eventually the Fed will be able to start to take its foot off the brake and actually lower interest rates, maybe 25 basis points in September. We'll know more this week when we get more of that inflation data.
So what does this mean for the average person at home for their wallet? Is good news right now when we hear the economy maybe cool? Does that mean bad news? What does this mean?
So it is a really good position if you have money in the stock market, any kind of money in the stock market, in a 401k. If you have a brokerage account, you've done very well. 16% is the return so far this year in the S&P 500. The S&P is up, which is typically what most people, it reflects what most people have in their stock part of their 401k. But since 2017, the S&P is up 140%. That is amazing. So if you have skin in the game in the stock market, that's great. Going into the fall, however, the slowing means maybe the Fed will be able to lower interest rates, and that will be better if you're borrowing money for a car loan, for a home loan, if you're borrowing money on a credit card. Credit card interest rates are terrible right now. So if you're borrowing money today, and the average family, be very careful of borrowed money today. It's still very expensive.
All right, Christine Romans, big week ahead. Thank you so much. Lots to watch out for.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.